How's everybody doing today? So we got a new stock that I'm buying. I thought I would cover it. This one isn't a lotto ticket like a lot of my other ones. This is more of a value play on a dividend stock that I think is starting to correct the things it was doing wrong. So the stock is AQN, so Algonquin Power. I'll give you guys the 5-year on these guys. Let's go max. So look, they were doing awesome all the way up until 2021, 2022, and then it started to go bad. And what happened was they got caught up in a lot of the kind of woo-woo renewable energy stuff. Like I said, I believe in renewable energy, but the stuff that's profitable. These guys were going into some kind of niche places where I just wouldn't have gone. That being said, they've turned a lot of that around, and we'll give you the bullish kind of sentiment and the bearish. So they've shifted to a regulated utility model. Algonquin is successfully transitioning to a core regulated utility model after selling its renewable energy business for up to $2.5 billion. Analysts expect this shift to provide approximately 20% earnings growth throughout 2026 and 2027 by reducing volatility and focusing on stable rate base assets. Strong earnings performance and guidance. The company reported in Q4 2025 earnings. They beat with the 0.0 EPS, earnings per share exceeding estimates 0.01. Management reaffirmed this in 2026 adjusted EPS guidance of 35 cents to 37 cents, supported by a 3.2 billion regulated capital plan intended to drive 5 to 6% annual rate base growth through 2028. So they're expecting, now the debt's paid off and that they've gone back to some steady paying portions, they think the money's going to be coming in. There'll be good growth up until 28. Significant developing capital stability. Asset sale proceeds are being utilized for massive debt reduction, with long-term debt expected to fall below $5 billion. This improved leverage profile supports a turnaround narrative, allowing the company to fund roughly 65 to 70% of its capital program internally without requiring new equity through 2027. So like I said right there, I love when you see a company acting like an adult, not being an idiot like my government. So bearish, obviously some bearish. Elevated valuation and PE ratio. Despite the recovery, the stock's trailing PE ratio remains high at approximately 23.5x to 39x, depending on reporting metrics. Some analysts remain skeptical, noting the stock looks cheap for a reason due to lingering concerns over financial quality. But listen, guys, that's where you got to make your money. You gotta look where you think the market has made a mistake. I think they've made a mistake on any utility company. Obviously, they need to be punished, but like saying it's a long-term thing, I don't believe that. Investor sentiment remains cautious as the company is still in a trust rebuilding phase under new leadership. Success depends heavily on achieving constructive regulatory outcomes. So yeah, like I said, so I think that you're getting a decent dividend. It's like a 4-point-something% yield for the year, but you're also getting a pretty good value play on top of that while you wait. I think we have no problem getting back up to the 20s. It's going to take a few years. And then after that, maybe into the 2030s, I can see them starting to buy, maybe expand. But hey, that's me. I bought about like 50 shares. I'm going to buy maybe 60 more. I hope you guys have a good day. Peace out.